In trade today. But with that, let's also welcome in our guests for the day, Vaishali Parekh, Vice President Technical Research Analyst at Prabhudas Leeladhar, and Rajesh Agarwal, Head of Research at AUM Capital, joining us now. Welcome to both of you. I'll start with the first question, which is from Pakshal Jain, who's writing in from Bengaluru. He wants to know as to which one of these is a better counter to invest in for the next 3 to 4 years between JSW Infra and Adani Ports. Rajesh, I'll come to you on this one. Which one would you prefer and why?
Good morning, Alex. Good morning, Mahima. Good morning, Vaishali. This is a difficult choice, I would say, because both are very good companies, whether it be JSW Infra or Adani Ports. Both are basically into port logistics and both are doing well. But out of these two, at this point of time, purely on valuation parameters, if I have to choose one, I would go with JSW Infra. Sitting on a lot of cash, trying to expand their capacity, they are doing very well, and the numbers have been quite good in the last 2 quarters of the listing and all. So at these levels, I think JSW Infra gives an edge over Adani Ports. Otherwise, Adani Ports is with this kind of capacity and all, it's also a very good buy. But at this point, I would say to wait for some more correction, maybe around 1300 odd levels, that would be a great buy too. So what I would suggest is why not divide your money into both of them?
That's a good point. And by the way, a standard disclaimer here, Adani Ports, part of the Adani Group. NDTV Group is also owned by Adani Group, and this is NDTV Profit. Well, we've got Jose joining us from Bengaluru. Jose, thanks so much for calling us. How can we help you today?
Thank you, Alex, for taking my question. My question is regarding Shakti Pumps. On a short-term basis, is it a good time to enter for a short-term basis or based on technicals?
Based on technicals. And you haven't entered yet?
I haven't entered it. I'm just contemplating.
What is it? Okay, so what is the time frame that you have in mind?
2 to 4 months.
Okay. Vaishali, great opportunity for me to come to you for the first question today. Very good morning to you. And would you suggest a fresh entry at this point for Shakti Pumps?
So, very good morning, Alex, Mahima and Rajesh. Yes, so actually we have been tracking this stock. In fact, yesterday we were just recommending this to our clients because we've seen the stock from 1400 fall to now making a low of 800 and just consolidating in this range. So for a short-term perspective, I would say, yes, it makes it an attractive buy. Keep a stop loss of 830. It is currently 883 and this can go towards 950 as the first target resistance.
950 is the first target that you can watch out for Shakti Pumps where charts are concerned. All right, the next question is from Rayan, who's writing in from Mumbai. He's bought Nalco 50 shares at 185 a piece and wants to know as to what should be the target that he should keep for the next 1 year as well as 3 months period for this counter. Vaishali, I'll again come to you on this one. What are the charts indicating for 3 months as well as 1 year perspective?
So, well, I think metal stocks are doing quite well. And talking about Nalco, it is showing signs of improvement. So I would say for near term, 3 month horizon, I would say keep 165 as stop loss and look for a target of 210. If this stock has to sustain and if we are talking about 1 year's horizon, I think this can go towards 270.
So that's it with regards to where Nalco is concerned. Our next caller for the day, Paramjeet, is calling in from Himachal Pradesh. Paramjeet, a very good morning to you. How can we help you?
Madam, I am having 7,000 shares of Motherson,
Okay.
Sumi.
Yeah.
Yes. At the rate of 147.
Okay.
Want to know long term as well as short term.
Okay, I got your point, Paramjeet. I'll take this up with Rajesh. Rajesh, he's sitting on a profit of around 33,000 odd rupees. What's your outlook like for Samvardhana Motherson?
It's a very strong company in auto and ancillary space. The only problem is most of the business comes from US and where we all the kind of problems going on due to tariffs and all. That's for the short term because the gentleman asked for both short term and long term. The short term, there may be a overhang of tariffs and all. Any announcement coming from Mr. Trump would be a overhang on this. Otherwise, for a longer term horizon, the company is very strong, doing very well. The products are well taken by Class A trucks and all. So for a long-term horizon, yes, it's a hold from our side, but for a short time, there might be volatility because of Trump tariffs. So if you're looking for a short-term horizon, be on a very close watch and keep a stop loss of maybe 140, 145.
That's with regards to where Samvardhana stands. Next question is from Sanjay, who's writing in from Mumbai. He wants to know if this is a good time to enter into Tata Power. Vaishali, I'll come to you on this one. There was an interesting note of Morgan Stanley today from their conference takeaways where they've maintained overweight with a target price of 449 for Tata Power. What they're saying is for solar EPC third-party orders that they have right now, they are expected to complete in FY26. And in terms of capacity expansion also, they're looking at good margin expansion going ahead. What's the outlook like where charts are concerned? Is this the right time to make an entry?
I would say so because, well, it has been very sluggish in its movement, but the near-term support lies at 380 and further confirmation of the stock comes above 400. So once we see the stock closing above 400 levels and sustaining, this is very likely that we can get our targets of 420, 440.
Okay, so that's a view with regards to where Tata Power is concerned. Our next question is from Nina Johnson, who's writing in from Kerala. She wants to know if she can accumulate REC at the current level since the stock is corrected quite significantly. Rajesh, I'll come to you on this one. What are your views with regards to where REC is concerned?
See, considering the power scenario in our country, the shortage and all, I think these companies, REC, PFC, which are basically into funding power projects, are going to do well. Their books have been cleaned, NIMs have increased, NPAs have gone down, and the demand for funds is going to go up because of the capex going on in the entire power sector. The government's focus on developing more on power side, I think these companies for a longer term can do well. And the added advantage is these companies give out good dividends too. The dividend yield is also good. So if you're looking for a long-term horizon, maybe 12 to 18 months, yes, it's a good buy. You can go ahead. But short-term, being a low beta stock, there won't be much of a volatility. So depending on your time horizon, I would say if you're long-term, go buy.
For long-term perspective, buy is the call which Rajesh is giving on REC. Our next question is from Vaibhav, who wants to know whether he should stay invested in something like an Aegis Vopak, where he's purchased 1,000 shares at 225 a piece. Rajesh, not sure if you have a view on this one. It's a fairly recent listing, day before yesterday.
Yes, it's a 2 days listing and not much of a data, even on fundamental side with us. But we have gone through the DRHP and all. And at these prices, I think one should better be at least booking partial profit because you never know when profit booking starts coming up. So I would say book partial profit.
Okay. All right. Now, we have been speaking about this for some time. The uncertain global scenario, what global investors are looking at, the focus on India amidst the emerging market pack. And of course, you as an Indian investor are, in any case, mostly invested in India at this juncture, though that might change going forward. The question you're probably asking is, will there be a sustained shift by foreign institutions back into India? Of course, they've been buying in fits and starts. Jonathan Garner, Chief Asia and Emerging Markets Head for Morgan Stanley, joining us right now, Chief Equity Strategist. Jonathan, thanks so much for joining me today and joining us and speaking to us about this. The question that I have at the start is, how do you parse this data that is emerging from the US? There's likely to be a slowdown in the US, and there seemingly is money flowing out of US assets. The understanding is that they're moving into markets like India and China. But is that durable? Is that sustainable?
Yes, so we have a view that the US economic growth is going to slow quite materially down to below 1% GDP growth next year. And what you're starting to see is a reallocation of global portfolio capital after a period of maybe 15 years of US outperformance on a multi-asset basis. And the markets that have benefited the most from that, when you look at the flows year to date, are actually in Europe. That's the really big change. And out here in Asia, I would say that so far things are somewhat more neutral overall. But there are pockets of interest, and India is certainly one of them, along with Japan, and probably to a lesser extent re-engagement with China, Hong Kong.
So let me take that forward. If we're talking about the implications of a slowdown in the US, in the past, and I'm talking about the last 2 decades, you've had a drop in capital assets as Wall Street falls. So the understanding is that if there is a slowdown, then that would reflect in risk assets in the US. But in India, you've had the emergence of domestic investors that have proven to be a little bit of a base. Do you see this cycle behaving differently from past cycles?
Yes, we do. It's not only in India where you have the SIPs, obviously, but in Japan we have new NISA. We have flows that are ongoing through what's called the Connect program, southbound into Hong Kong from mainland China. So this theme that Asia, what we call Asia's financial acceleration or development of local capital flows supporting local markets, it's actually a pan-Asia theme. And I do want to emphasize that the slowdown in the US that we're anticipating is to do with a couple of things. The trade and tariff policy, which effectively acts as a tax on the US economy, and in addition, the immigration policy, which reduces labor supply. So that's how our economists actually see it. Whereas actually in the rest of the world, we have a much more muted growth impact. For sure, China will be affected by this and will have slower export growth overall. But for India, and we've already seen this in the Q1 GDP growth numbers, it's over 7%, we have a very strong growth profile for this year. So India is not going to exhibit a downside in growth in relation to what's going on in the US. And meanwhile, the dollar weakening trend actually gives policymakers here in Asia a lot of degrees of freedom. They're actually able, and we think this does apply to the RBI, to cut rates. We think there are 2 more rate cuts coming for India this year, even with the Federal Reserve being on hold and US growth slowing. And that is quite unusual.
And there are so many interesting conversations that are emerging from the conference that you're currently holding, but I'm curious about what you think about the opportunity. So I was leading into this question, Jonathan. If there are opportunities because of a global slowdown and a correction in risk assets, where would you suggest deploying? I would assume that these have to be in India, domestic-facing themes, so where would you focus?
Yeah, absolutely. So financials, consumer, discretionary and industrials in India, which are the majority of market cap. We also are emphasizing financials in other core geographies in Asia, including Japan and to some extent in China. And what you have to be careful about, obviously, are Asian export companies that get caught up in the trade and tariff issues, and where actually currency strength tends to sort of diminish their margins. And so that's not such an attractive feature for like export-dominated markets, including, for example, Taiwan. So India, with its very strong domestic growth dynamic, is our top overweight in the region.
Okay. Is there a threat at all to Indian equity? And I'm talking about flows here. We've seen yields in Japan move higher. We've seen yields in the US move higher for various reasons. Do you see a threat in terms of flows and move away from risk assets at all down the road?
Well, if you look at Japan, and we actually just held an investor conference in Japan, reflation and a normal yield curve becoming re-established is the key theme. And certainly those long-end yields in Japan are still well below the equivalent yields, for example, in the United States. And what's really interesting here in India is that your 10-year yields have actually been very stable and broadly declining. So you're not really caught up in this debate about the shape of the yield curve as it affects the US. And actually there's a sort of multi-asset flow story developing for India on both the equity and the fixed income side, as well as obviously longer term private equity flows. So all of this gives the balance of payments a lot of sort of security and means that the rupee, again, is not as vulnerable in a US slowdown as you would have seen in the past.
What factor, in your opinion, Jonathan, will crude play in all of this? Ultimately, for an economy that is dependent primarily on crude imports, and $65 to the barrel for Brent is a good sign. So, do you see a material shift if that changes, if that picture changes?
Well, and the sensitivity of the Indian economy to the oil price is diminished from what it used to be in the past. And the starting point is a current account deficit relative to GDP that's much smaller than in the past. And we tend to think that the Brent oil price will be somewhat softer going forward in relation to OPEC plus production, which is actually currently increasing. And so this actually is another supportive feature for the Indian economy. So these cycles that we used to see maybe 10, 15, 20 years ago, where problems on the external side due to oil price surges or domestic inflationary surges, weaknesses in the domestic supply side here, they really have been going away in recent years, which is testament, of course, to the improvement in CapEx, public and private CapEx, and the fact that you have both a demand and a supply story in India that are moving in tandem together as this economy develops. It's a very exciting story.
Jonathan, I was reading comments that you'd made earlier in the year. Please, tell me if that's changed at all. By my understanding of what you said, you expect that the earnings slowdown is temporary in India, and you expect that to pick up over the course of this year as well. Can you tell me what your base case assumptions are for FY26 and why you're saying that growth will pick up?
Yeah, so we did have a cyclical slowdown last year after the election, and we've now had an easing of policy on the monetary and fiscal side, and CapEx is starting to rise again. So it's likely that earnings growth will reaccelerate, and it's certainly the case that we can be looking at maybe mid-teens earnings growth on a go-forward basis. For our global clients, what they really care about is dollar earnings per share growth over the cycle. And there, India has a very strong story to tell. For the MSCI India index, US dollar EPS growth is averaged around 12% per annum over the cycle. And that's far higher than any other emerging market.
Jonathan, thanks so much for taking the time. Pleasure speaking with you.
Thank you.
All right, so you got some perspective from a global voice talking about the India story and the opportunities here. And I found what he said at the end about the earnings trajectory very interesting, and that there's expected to be an upsurge in the earnings picture, particularly in the context of what we saw in the Q4, and a few companies coming out and say maybe things are not as bad as you had thought they were.
Absolutely, and that goes for every sector probably. In fact, there have been standouts in every sector, and there have been companies that have lagging in every sector. So it'll be interesting how FY26 pans out for all the sectors.
Yeah. Certainly. Let's circle back. And I know that this might be a little bit jarring. We're talking about big picture and then heading back into individual stocks, but this is what the show is all about. It's getting you answers to your questions. We just spoke about Aegis Vopak before we went to Jonathan Garner. Let's take the next question from Piyush Raj, who's writing in about Coal India. He's bought at levels of 441 rupees. He's got 840 shares, and he's incurring a loss at this juncture. So there's quite a bit to talk about, Rajesh, when it comes to Coal India. They have not really hit their production targets, but is this a story that you would bet on? Of course, thermal power not going anywhere.
Yes, I totally agree that thermal power is not going anywhere, and the kind of capacity Coal India has not only in India, but it's one of the largest across the world. With the kind of demand coming out from power sector, we just discussed sometimes back about power in the show only. So I think the prospects are huge, and not to forget the dividend yield, it's coming to around 6% plus, and that's an added advantage. So if somebody looking for a long-term stable kind of return, Coal India would be a good choice. Our target for next 1 year is 460 rupees. So any dip should be taken as an opportunity to accumulate. If the gentleman's funds allow, we can even add to his position, or else I would say continue to hold.
Continue to hold is the view coming on Coal India. Our next question is from Riku, who's writing in from West Bengal and wants to know if he can buy and hold Reliance Power for the next 12 months. Vaishali, I'll come to you on this one. On the charts, what is Reliance Power indicating?
Reliance Power has got into a very strong uptrend, and it's also our recommendation as a disclaimer. Technically, if you see, it has given a breakout from 55, 56 levels, even on a weekly chart. So I think if it's sustaining well above, and which it is right now, I think I'm looking at a target of 80 to 100 in times to come. That would be my target. So it is a buy, keeping in mind 55 as support. And to those who have bought, please continue holding with the trailing stop loss.
So that's a view on Reliance Power. We have to slip into a very quick break. We've got more time on the other side to take more of your questions, so do stay tuned. Keep them ready.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. For viewers who's just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. We've got our next caller for the day. Murli is calling in from Bengaluru. Murli, a very good morning to you. How can we help you today?
Good morning to you, and thank you for taking up my query. I happened to observe the interview of HCL chairman,
Okay.
your channel,
Okay.
and he is sounding quite confident about the future exponential growth.
Right.
And though it's very expensive at the current rate, considering the 2 years at his view,
Right.
I'd like to buy at a current rate of around 250
Right.
from a long-term point of view, because being one of the almost near monopoly in India.
Correct.
Yeah.
Okay.
What's your view?
Okay.
Long-term view.
Okay, got your
Yes.
query, Murli, and thank you so much for watching those interviews very diligently. I'll take this up with Rajesh. Rajesh, what's your view with regards to where Hindustan Copper is concerned, and do you think this is the right time to make an entry?
See, metals are doing well. The only hangover is something comes out from China that would be a hangover for a short term. But for a longer term horizon, it's one of a good buys in the metal space as such. The reserves are good. They're doing very well. Numbers have been satisfactory. And the best part is copper demand is going up day by day. So demand is going up. They have pricing power. I think one can continue to go long on in copper for a long-term horizon. Next 1 year, we would expect a return of maybe 15 to 18% from the current market price.
All right, Murli, I hope that answers your question. You can buy at the current market price. And it's an interesting play if you think about it, right? Copper is what you need for a lot of electrical appliances, and that's what all of us use. Let's talk about John's question from Chennai. John is writing from Chennai, is asking about Infibeam Avenue, which he's bought at a price of 19.3 rupees per share. He's in the green just marginally, so he's looking for the short-term targets. Vaishali, on the charts, what's the view?
Well, chart, it is showing signs of reversal, and right now it's going through a consolidation phase. So now that he has bought at 21, I think keep a trading stop loss of 20. And I think in times to come, it's a trading strategy. I would look at a target of 24 to start with. We can have a relook once this crosses 24.
Okay, all right. So that's the view on Infibeam. Utsav is calling us from Andhra Pradesh. Utsav, very good morning to you. How can we help you today?
Good morning, sir. We have bought ONGC at 251 rupees,
Okay.
worth of 1,000 shares.
Okay.
Can we hold it for short-term gains?
Okay, I got it. And when you say short-term, how you define that, Utsav?
3 months.
3
Holding
months.
for 3 to 6 months.
3 to 6 months. Okay. Vaishali, on the charts, it's something that reacts when crude oil prices move, and it has done so. Crude oil prices have been soft and it's moved lower. What is the view right now?
Well, so this is one of the stocks which has been quite a laggard, and it has right now it is showing signs of weakness. So I would say I don't see much of an upside coming in right now. However, if he still insists to hold, keep a stop loss of 230.
Okay, so that's with regards to where ONGC stands. Our next question is from Kathan. He's writing in to ask about Khaitan Chemicals. Sorry, my bad, Satyan. And he's writing in to know about Khaitan Chemicals and wants to know what's the next technical support specifically for this particular counter. I'll come to you, Vaishali, again for this one. What are the charts indicating for Khaitan Chemicals?
So Khaitan Chemical currently at 86 rupees. I think the stock has really surged very well, right from 45 to 85, 86 levels one way. So I would say keep a trailing stop loss of 80. And I think this can further surge towards, because it has a weekly chart projection of 95. So that is the target that we can look for.
All right, so that's the view with regards to where Khaitan Chemicals and of course the charts are concerned. Our next caller, Venkat, is calling in from Hyderabad. Venkat, a very good morning to you. How can we help you?
Hi, very good morning. So I would like to know about Bank of Maharashtra. Actually, I bought 440 shares on average price of 65 rupees.
Okay.
So can I, actually I have taken for long term only.
Okay.
So can I average here? Is it, the fundamentals are good? I would like to know.
Okay, I got your question, Venkat. I'll take this up with Rajesh. Rajesh, Bank of Maharashtra, he's sitting on a loss of around 3,000 odd rupees right now. But what's your view with regards to Bank of Maharashtra plus the entire PSU pack?
See, coming to PSU Bank as such, we are very bullish on the entire pack. Balance sheet has been cleaned, NIMs are improving, business is improving, and the best part is after the 2 cuts of RBI, we are expecting third cut to come very soon. So all these are going to help PSU Bank because of their bond portfolio and other things. As far as Bank of Maharashtra is concerned, it's one of the strongest bank in the entire space. If you look at the numbers have been the best in the entire peer sector from the last 2-3 quarters. Almost nil NPAs, NIMs improving, advances have gone up. They're moving into technology. We have a strong buy call into this for a target of maybe 70, 72 odd rupees in the next 18 months. So any dip should be taken as an opportunity to accumulate at these levels too. It's a buy for somebody looking for long term. We have initiated a report last week that just as a disclaimer on this.
Okay, all right. So that's the view on the PSU banking pack and specifically on Bank of Maharashtra. Chitra is writing in from Chennai asking about BHEL and Bharat Heavy Electronics is a name of the counter. This is something that she has bought at levels of 249 and she's wondering whether to hold or sell for a month's view to get a profit. What's the view on the charts, Vaishali?
No, the stock has been trending and right now it's in a consolidation. The near-term support lies at 250. So I think keep a stop loss of 240 and continue with the position and look for a target of 270 if 1 month is the horizon.
Okay. All right. So that's the view on BHEL. Let's take our next caller. We've got Shubha calling us from Hyderabad. Shubha, very good morning to you. How can we help you today?
Good morning, Alex. I'm holding 1,000 shares of Bajaj Housing Finance.
Okay.
I bought it at 150 rupees.
All right.
So I want to know what is the view on that.
And do you have a long-term fundamental view? Is that why you bought the stock?
Yes, I'm looking at long term.
Okay.
Maybe around 3 to 5 years.
Okay, great. All right. So Rajesh, on the charts, it is something, not on the chart, on the fundamentals, it is something that has languished a little bit in the recent past. And I guess this can be called a time-wise correction or a consolidation, so to speak, because if you look at the issue price, it's still much higher than that. And so therefore, would you continue to hold? Would you add? Would you use this opportunity to build your position for the long term?
It's a buy from a side. The second largest housing finance company in the last 4-5 years, if you see at the CAGR growth, it's phenomenal. This quarter also numbers have been good. For the full year, AUM has grown up, doing very well. And going forward also, we think with the kind of parentage it has, the company is going to do well. It's a buy from a side. We have a target of around 170 odd rupees in the next 2 years. So it's a buy. One can even add to that.
All right. By the way, I'm sure a lot of you know this, but in case you didn't, the show that comes up next at 11:30 is geared towards giving you a detailed understanding about one company a day. It's called Know Your Company. And the team dives into ITC hotels today. So it's going to be a very interesting one. In fact, my co-anchor is going to be featuring on that show as well because she tracks the company very closely. They'll be talking about what the potential is, what the opportunity is. Actually, why don't you do it?
Okay,
Since you're going to be talking about it, why don't you talk about why we're discussing ITC hotels today?
Absolutely. So it's a very interesting hotel to watch out for. It recently got demerged from ITC. And if we look at the number of keys that the company has, it's the second largest hotel chain in India after IHCL. So one of those factors definitely comes into play because a very interesting hotel to watch out for. Plus the growth target that they have is significantly high. They're going to go at 50x in the next
number of rooms, you're saying?
Number of rooms, yeah. Number of rooms in the next 5 years is what they're penciling in. And plus, the very interesting part here also is that they're moving towards management contracts completely, which will also enhance their margins.
Okay,
going ahead.
don't say everything that you're going to say on the next show.
So you'll have to wait and watch.
If you want to watch more details on that, you know what to do. Tune in to NDTV Profit at 11:30. We're speaking to an analyst today, Prashant Biani of Elara Securities, about whether or not there is value to be found in buying ITC right now for the long term. The questions, of course, are whether or not the addition of capacity will aid the company's top-line growth going forward as well. So the next question we're talking about is, or stock we're talking about is BSE. And we got Pankaj writing in, asking for a very long-term view. He's talking about a 10-year view on the BSE. I'm going to ask you a trick question. Rajesh, do you remember what the BSE Sensex was 10 years back? And would you buy for 10 years, BSE?
See, 10 years back, I'm not very sure, but if I'm not wrong, it was around 40,000.
I'll have to check and see whether you're right.
I also have to check because so much of volatility and it's gone up quite fast in the last 4 years or so. But as far as BSE is concerned, we have been recommending this since very long period of time, the last 2.5 years. When it was languishing around 500 odd rupees, it went up to 7,800 come bonus, and now it's trading around 2,800, which is 8,400 come bonus. So it's a very strong buy. At these levels, maybe some amount of correction is due. It might correct, but when you're talking of 10 years down the line, I think these companies, be it BSE, NSE, CDSL, these are platform companies where the capex has already been done. They have huge business potential. Specifically for BSE, if you look at the options market, they have increased their market share into that. Last September, when it was zero, now it has considerable market share with them. They have a whole lot of cash with them, 18% holding in CDSL. They have Star Mutual Fund platform, which is one of the largest mutual fund, presence in Gift City. So everything goes into the company's favor. The no issues of corporate governance, and the recent development is the Sensex futures, which they have been trying to promote, has been taken off well and is doing very well. So everything goes in favor. The only thing is it's run up quite a lot in the recent past. Maybe some amount of correction or consolidation might happen, but that's for short-term players. If you're talking of long-term, yes, it's a good buy. For long-term holders, I would say.
So it's a good buy for long-term holders is the view coming in on BSE. All right, our next caller, Pradeep, is calling in from Bengaluru. Pradeep, a very good morning to you. How can we help you?
Madam, good morning. See, I am having 150 shares of Rifex Industries.
Okay.
At a purchase price of 107 rupees.
Correct.
Right now, the price has gone up around 5 times.
Right.
So I would just like to ask whether I should hold it for another 1 year, because I have a vision of another 2 to 3 years.
Okay.
So whether I should hold it or book profits, and if I book profits, then whether I can go for Chambal fertilizers.
Okay. And Pradeep, just to understand, when you bought this, did you see the fundamentals of the company or did you see the technical charts while buying it? You saw the fundamentals?
No, fundamentals, because I'm an investor basically.
All right.
do it for a long term of 3 to 5 years.
Okay, Pradeep, got your question. I'll take this up with Rajesh. Rajesh, not sure if you have coverage on this one. Reflex Industries, it's basically into eco-friendly refrigerant gases. When I was seeing the technical charts as well, the company has seen significant momentum in the past few months. But in terms of fundamentals, where fundamentals are concerned, what's the view like?
See, coincidentally, day before yesterday, we have given a buy call in this, and we still stick to this. The company has been doing well. They're into refrigerant gas, as you said, Chennai-based company, doing very well. As per the management commentary, they have strong growth plans going forward. In the recent past, they have raised some funds too. There was news of them taking over Gensol's car business, but they have backed out of that. So otherwise, fundamentally, it's a very strong company. For a long-term horizon, maybe one can add on dips. 12-month target, we have around target of 600 odd rupees. So it's a buy from our side, add on dips.
And add on dips is the view coming in on Reflex Industries. Our next question is from Sampath Kumar, who is writing in from Kurnool, Andhra Pradesh. He's holding BEL shares at 231. He's bought 201 shares at 231, sitting on profits of 31,000 odd rupees, and wants to know if he can continue to hold at the moment or not. Vaishali, I'll come to you on this one. What are the charts indicating, and what are the supports and resistance levels that you're seeing?
No, I would say BEL is one of the stocks which has really shown a very good run-up, and I think it was a one-way rally right from the near-term support of 300 to now 385. So according to me, partial profit should not be ruled out, and if you want to have a disciplined trading, then keep a trailing stop loss of 380, and maybe this can go towards 400, 410.
Okay, so that's with regards to where BEL stands. Our next caller, Ram, is calling in from Chennai. Ram, a very good morning to you. I believe you have a query on Equitas Bank.
Yes, sir.
Go ahead with your query, Ram.
So I have 400 shares on average price of 98 rupees.
Okay.
So can I hold for long term, or can I exit or switch to another bank?
Okay. Okay, I got your point, Ram. I take this up with Rajesh. Rajesh, he's sitting on a loss of 13,000 odd rupees right now. What's the outlook like for Equitas Bank? Should he book losses and switch to some other bank?
See, the numbers have been not that great. The company and the bank is not doing well on operational parameters. I would say the numbers are they are better numbers in the banking space. As I discussed some in the show, that the Bank of Maharashtra looks good on all parameters. So what I would say is switch from Equitas to Bank of Maharashtra. That would be a better choice.
Okay, all right. CDSL. Now we spoke about BSE, and I think you did mention CDSL in that breath, Rajesh. The question is for you. Venkat from Andhra Pradesh is asking whether to add more to his holding of CDSL. He's got an average price of 1,257, pretty attractive buy price. He's got 10,000 shares, so pretty large quantity. Would you hold on to that? Would you add more?
See, it depends on your time horizon. If your time horizon of 12 to 18 months or even more, yes, you can add to that, because as I said, these platform stocks are going to do well. In case of CDSL, the number of new customer additions has been good. DP is doing well. They are moving into new products also. So I think for a long-term horizon, it's a strong buy. Maybe in the short term, as I said, for BSE also, that there might be some amount of consolidation or correction, just because of the fact that they have run up quite a lot in a very short span of time. Otherwise, fundamentally, they're a strong buy candidate. They have good, strong, undisputed, I would say, business models, which only one or two companies, for in case of CDSL, that's only one company. In SDL, that's also unlisted at this point of time. So yes, it's a buy and a hold from our side for a long-term horizon.
Okay, buy and hold from a longer-term perspective for CDSL. Our next question is from Teju, who wants to know about Suzlon. His buying price is 66 and number of share purchased is 2,000. Vaishali, on the charts for 1 month, what are they indicating?
Well, Suzlon has been doing very well in the recent past, and right now, when we are seeing a good uptrend, keeping 1 month in mind, I think keep a stop loss of 64 and look for a target of 78.
All right. So let's now talk about an NDTV Profit exclusive, and this is the latest in a string of exclusives related to Vodafone Idea. Of course, you probably heard the conversation that NDTV Profit had with the telecom minister yesterday, where he was asked about Vodafone Idea, and he said that he would choose to not comment about any developments as things stand. And then later in the day, we got exclusive information that the government might be looking to throw another lifeline to Vodafone Idea, specifically with regard to the treatment of AGR dues. The latest development has to do with what banks are saying. Are they likely to lend to Vodafone Idea? What are the conditionalities that they're looking at? And my colleague and our bureau chief and editor of banking and economy, Vishwanath Nair, joining us on the phone line to tell us about what he's heard. Vishi, important information that you picked up.
Right, Alex. So the development is clear that the lenders have put their foot down and said that they need that clarity on the AGR dues, specifically before they even consider lending to Vodafone Idea any further. Now, what we're understanding is that the major public sector banks are actually in favor of giving loans to Vodafone Idea, provided that the government gives the necessary extension or waiver of the AGR dues that Vodafone Idea owes to the government. Currently, 84,000 crore, nearly 84,000 crore worth of AGR dues are pending from Vodafone Idea, of which the company has sought a waiver of 45,000 crore worth of dues. So the banks are very clear that till we get some clarity from the government on what exactly they're going to do with the dues, we are not really inclined to look at the proposal. But the minute that happens, they will be very willing to extend the loans. And this is, remember, the major public sector bank side of the story and other public sector lenders. In terms of some of the other private sector lenders, it seems that they're still very reluctant to go ahead. We'll have to see, how these pieces fall into the place, and finally how lenders actually end up giving further loans to Vodafone Idea. They need that money from the banks to ensure that even after that AGR dues waiver, their business continues to sustain and they're able to grow their business further. For that, they will need the bank financing, which is crucial. But till the government gives some clarity, banks are going to stay put.
Very important story there, and we'll come back to you, Vishy, over the course of the day, of course, to see if you pick up anything more. And of course, it's sizable information as it stands right now, and we'll see how that pans out for Vodafone Idea. Let me actually go across to Rajesh on this one. Rajesh, Vodafone Idea, it's a company that is flagging, it is losing market share as we speak. Of course, in the fourth quarter, the losses were less than they have had in the past. But they incurred a net loss, and that's because the finance cost was larger than the EBITDA that they earned. So they need a bailout.
Yes, I do agree that they need a bailout because the debt is so huge that even if they continue raising some amount of fund, that won't be even able to service the interest part. And unless this AGR thing is taken care of, I don't think there is any point in, fundamentally any point in investing in Vodafone Idea. Even if you look at the operations, they are lagging to 4G. Forget about 5G being launched in the entire country. The RPUs are the lowest in the industry. You have good companies in the sector, maybe a Jio or a Airtel doing very, very well. So why not invest into that? But yes, for small trading and all, maybe punting, you can take this as an options market where you buy a 6 rupee option in a hope of maybe going to 12 rupees or going to zero. So if somebody's ready to take that kind of risk, Vodafone can be a buy. But fundamentally, it's a avoid from a side.
So that's with regards to where Vodafone Idea stands, and as and when the news comes, we'll keep updating you on the entire Vodafone Idea saga. All right, our next caller, Harish, is calling in from Pune. Harish, very good morning to you. How can we help you?
Yeah, very good morning. I can see news about block deal of Tata Tech flashing on your screen.
Correct.
And my query is about Tata Tech only. Being a retail investor, I did take a largest position of my portfolio in Tata Tech. I have 93 shares at an average of around 900 rupees.
Okay.
So can I, keeping the electronic vehicles future in mind, and Tata Tech into, keeping the advanced features of Tata Motors in mind.
Correct.
What could be the future of Tata Tech, and is it a hold for long term or what? Please suggest.
Okay, Arish, I got your question. I'll take this up with Rajesh. Rajesh, the block deal that he's talking about is roughly 2.1% of the equity changing hands today, and it's probably a clean deal there. What's your view with regards to where future of Tata Tech stands?
It's have been very surprising that despite being such a good company, doing very well, previously they were catering to a large part of their revenue came from Tata Motors only. Now they have diversified their not only client base, they diversified their product profile also. And despite that, the stock has done nothing on the bourses. I remember on the day of the listing or one or 2 days after the listing, it was quoting at around 1,300, 1,400 odd rupees. And now it's 750. That's almost 50% correction. And there is nothing wrong with the fundamentals, I would say. So it's very surprising the way it has behaved on the market. But for a long-term horizon, I think at these levels, at 750, 760 odd levels, it's a good buy from our side. One can expect at least 15 to 20% return in the next 1 year.
Okay. All right. So that's the view on Tata Tech. By the way, as our viewer pointed out, there was a large trade and some of these stocks reacting quite sharply to those large trades. We've got Sikan calling us from Odisha next. Hi, Sikan. Good morning to you. How can we help you?
Good morning.
Please go ahead.
Hello.
Yes, I can hear you.
I'm holding JSW Energy since last 2 months at 523 and I haven't booked any profit yet. So how much more time I should hold this stock?
Okay. So the stock is currently at 507. Did you have a specific target in mind?
Like 4 to 5% short-term gain.
Okay. All right. So let me go across to Vaishali. Vaishali, he is holding on for gains, and so therefore, is that likely?
So I don't see much of a momentum setting in JSW. That's the one which we are looking at, right? JSW Energy. It's just been oscillating between 480 to 520. The actual strength comes only above 520 levels. So for now, I would say if he is holding, look at 520 levels as resistance, and then see if it goes higher, then continue holding.
All right. It's time now for the rapid fire round, and this is where Rajesh as well as Vaishali, we throw as many questions as possible at you over 2 minutes. The first one is on PNB, and we've spoken about a few public sector banks. Would you buy, sell or hold at 100 rupees per share, Vaishali?
Hold.
All right, the next question is on Quality Power Electricals. Rajan has bought 50 odd shares and wants to hold for the next 3 years. Rajesh, not sure if you have a view on this one.
We don't cover this.
Okay, RVNL, short-term and long-term target. This is for 6 months at the very least, bought at levels of 125. Would you hold, Vaishali?
Definitely hold.
All right, Gillette India is the next counter. Praveen Kumar wants to know if he can make an entry in this particular counter or not. Rajesh, your view?
Bye.
Central Bank of India, 15,000 shares, bought at 40.8 rupees per share. Would you hold at this point? Ishant wants to know. Vaishali?
Hold.
Alcargo Gati is the next counter. The viewer from Bangalore is holding around 150 odd shares and wants to know if he can continue to hold for the long-term perspective. Rajesh, your view?
Sell.
Oberoi Realty, for a period of 2 months, bought at levels of 1,676. Kusuma from Pune wants to know, any price targets? Vaishali, for you.
Yes, so price target will be around 1,900 to 2,000 levels first.
Okay, Vedant has 200 shares of HDFC and wants to know if we can sell and buy Coforge. Is that the right thing to do, Rajesh?
We have an ad call on HDFC Bank. Rather, I would say ad.
Okay, the next one is Servotech. Interesting. Stock in focus today on the back of an order win. Any view on this one, Rajesh? Sunita wants to know. She bought at levels of 125.
Hold.
Okay, Infosys is the next counter. Abhishek wants to know if he can continue to hold from a longer term perspective. Your view, Rajesh? Rajesh, your view?
You said Infosys, right?
Infosys, yes.
It's a buy from our side.
Okay, Mazgon Dock, shipbuilders bought at 3,512. Short-term view is being sought by Vijay Kumar. Vaishali on the chart?
Well, continue holding, stop loss 3,300.
Okay. All right. Thank you so much to the both of you for joining in. Rajesh, Vaishali, always a pleasure having you on the program. And well, that brings us to the end of this edition of Ask Profit. It's been an absolute pleasure bringing it to you from Mahima and myself and the team that's put this show together. Thank you so much for watching. Do stay tuned, as we've told you.